Hello traders, welcome to the LFB and our global video charting review. This is for the 16th of March 2011. My name's Mark O'Haig from the LFB Trade Desk. Before we continue, we do have to point out that any form of trading involves risk of loss. Forex involves a substantial risk of loss and may not be suitable for everybody. Each investor should assess their risk tolerance. And also, we would ask that you read and accept the disclaimers that are posted to the LFB website before reviewing the video. The overnight trading session leading into midweek trade saw very little price movement in equities. We're looking here at the S&P 500. Commodities were the same and currencies were the same as recent moves to balance the risk from civil unrest in the Middle East and the devastating effects of the earthquake in Japan, and we send out a huge amount of white light to all those that are impacted by this terrible disaster unfolding. But the markets at this point in time have found fair value and have consolidated after a period of trade that's been driven by the fundamental side of the market that now could turn into a period of trade that consolidates around technical price points. Looking at the S&P 500, this is the futures contract. This runs 24 hours a day and we're looking at the front end. We've got a trend line moving lower, which tells us that the sell resistance setup is in play at the moment. When you've got a short trend, you're looking to sell the upside test of resistance and not necessarily just to buy the breakout of support, because by the time you've got down to support, and the video will explain this in deeper detail as we get through it, when you've already got down to support in the current environment, a lot of momentum tends to be used. We've got momentum candles. These candles are blue. When there's bullish momentum, they turn white. When there's bearish momentum, we can also see that the 100-day simple moving average is in play. That's the orange line. We've got the 50-day simple moving average as resistance, and we've got the 20-day moving average as further resistance just above at the 1310 area. We've also got the daily swing points that are posted. These are proprietary swing points. They are unique to the LFB. And we can see each day after the 24-hour period of trade, we can see how these set 3 sets of upside, 3 sets of downside support and resistance. But the pattern of trade has been that it's very difficult for the current market conditions to allow a test and a break of resistance 2 or support 2 that holds through to the next 24-hour period of trade without reversing virtually all of the move. So although we're in a short trend, you can see that on a near-term time frame, it's very sporadic, choppy, overlapping price action that we've got. Asian, European and US equity futures are at their opening prices ahead of Wall Street trade, with the S&P 500 highlighting once again how important the 1250 price point really is. The previous client notes have highlighted the historical movement through 1250, both going long and short on the S&P 500, has tended to lead to sustainable price action movement. And this 100-day simple moving average sitting at the price point that we have right now, which is this 1250, where we've got this 100-day simple moving average just above that. That's going to indicate from a technical perspective a weekly chart close above or below that is going to show the path of least resistance for the S&P probably through the rest of March. At times like these, where there seems to be as many economic question marks as there are answers, sentiment reads become very important as a way to gauge potential trend reversals or continuations. Taking a quick look at the gold markets as well, there's been very little movement in the commodity market trade overnight, with precious metals and bullion markets absorbing the previous session of trade that saw profit taking on a grand scale. We can see that gold's just given us a continuation of a near-term short trend. We are in negative, bearish momentum reads, and we've got price action sitting just above the 100-day moving average and the 50-day moving average around this 1375 area. Gold has settled around 1400 on this futures contract, and there really does seem to be a decent amount of support around that price point. When we look at silver, silver's held around 34 as a price area, so we've got that 1400 with solid support at 1375 on gold. Silver had a dramatic sell-off in the previous session, but got to be very much aware this silver market still looks very, very bullish on a mid and long-term perspective as well. But the same as in equity trade, there's no clear-cut signal coming from the global commodity market at this time. Interest rate markets have seen a move lower on the benchmark 10-year Treasury note yield, which trades around 122, just above the 100 and the 200-day simple moving average areas. As note values go up, yield values drop, which is your interest rates, and Treasury note trade is indicating that the path of least resistance for interbank trade will be to maintain the virtual 0% interest rate that most major central banks are currently holding. The jawboning that we started to hear from some of the regional central banks in regard to increasing interest rates may now be very difficult to be able to follow through with in light of the unfolding problems that are coming from the global economy at this point in time. Going to look at euro dollar. This is one of the major currency pairs. This is an inverse dollar index chart. Euro makes up nearly 60% of the dollar index. So while the dollar index trades at 76.50, euro is trading around the 1.4 area. So just so those traders that don't have a live dollar index feed, when you hear the dollar index at 76.50, it means that euro is going to be trading up around the 1.4 area. The dollar index continues to hold above 76.50 support as an inflection point that's been highlighted over the course of the last month of client notes. There really does not seem to be a global desire to be long the US dollar from an economic standpoint, but it does, however, seem to be a need. There does seem to be a need to move dollar values higher as a hedge against global reserves, which the US dollar makes up a vast quantity of. It's the hedge required on that global reserve that's going to temper the weak dollar policy that's within the US. The major forex pairs moved absolutely nowhere overnight. Euro dollar was the only one that moved, and when we open at 39.80 and go into the US session at 39.40, you know you've had a very, very quiet global trading session. But we're now looking at an overall dollar outlook that does seem to have found support, and it's going to be very difficult now for the global market to break and easily hold below 76 on the dollar index or above 4100 on euro dollar. The last 6 months have strongly tested the inverse correlation between global risk and interest rate markets against the US dollar, with black swan events now coming at a fast enough pace on a month-to-month and quarter-to-quarter basis to form a new trading pattern. We've got to understand as traders how things are now evolving from a fundamental and ultimately and by default a technical view. Stability, consistent volume, solid outlooks and correlated markets which were free to react to mid and long-term views have transposed themselves into sporadic, low volume daily price moves that are very reactive to the opening and closing of each regional session. Black swans are rare and they're used as the euphemism for unique and sometimes challenging periods of trade, which now are becoming more and more the norm. In general, the near-term outlook is likely to be to sell resistance and buy support on any given market as each regional session gets underway in line with that near-term trend read, leaving a balance to run that would catch any potential breakout moves that do show an ability to hold, but that's going to be just one-off breaks that will tend to get heavily reversed. These are testing times for traders and investors as global markets become more reliant on sentiment changes as each 8-hour session completes, with overlapping and choppy electronic trade that switches gears at a fast pace. Bank early and bank often, and from a forex point of view, if you look at dollar Swiss, you tend to get a good read on whether the market's going to be able to make sustainable price breaks. And really, it was only Tuesday trade out of the course of probably the last month that you've had a sustainable break across all markets that did get correlated. So now's the time to sit back, watch things unfold on Wednesday, and we'll be able to gauge from there what the sentiment and momentum reads are, because we're going to be looking technically at where these fundamentals have driven things, because it looks as though we're going to get a period of consolidation.